The market persists out of time, price, and volume. And we're going through this in this video. And very important is, of course, to understand this tool. What you see here is called Zero Chart. Zero Chart costs you around $1,500 minimum for the next 2 years. And if you don't have more than $3,000, $5,000, $10,000, it's not recommended to use this trading platform. I think like a trading platform like TradingView is good. It will also have a volume profile. But in the end, it's literally about how many times can I see to adjust $100 and get $500, what this channel is about. And then, of course, how, if I have a lot of quantity, how to go with quality. There are always 2 steps, and this is how this tool can help us in advanced trading, especially when we have more money for trading. That means the first one, are we seeing enough cash flow? Cash flow means if I'm sitting down within a month, maybe 20 or 30 hours, that's just like 1 or 2 hours, 2, 3, 5 times a week between Monday and Fridays, between 9:30 New York time and 4 p.m. New York time, just like the New York session. Can I see, for example, here you see volume, and this is the trading session. What you see here, those are market participants that are trading here in the session, and here you can see clearly, obviously, it makes more sense trading in this time. And you can see here that this one is worth of $2,000, $3,000 this move. Here again, $2,300 this move. Like all these moves that you see here are $2,000, $3,000 worth. And if you can see that every day you trade, maybe within just like 1 hour, let's just assume you just trade 1 hour, for example, we can adjust the leverage that even this here is a $2,000, $3,000 move, because this is actually a 1 hour chart. This might be from here to there like a $5,000, $8,000 move or something. And when we adjust this one correctly within 1 hour, you can see here just like a $800 to $1,500 move. These white small lines that I'm just drawing in both directions, going up and going down. So that's the first one. We want to have enough cash flow. That means like if we sit down on the computer to say like, okay, today I was on the computer, I saw 3 moves and 2 of them were maybe $500, $800 move. The other one was like a $2,000 move, for example, with the direction. And then which of these moves were you able easier to see is something what is very important. And then you already solved the one problem. A very big struggle is having cash. Because in trading, it's literally about like, okay, can I have enough moves that I can see $2,000, $3,000 moves? Now the problem is not anymore to make $2,000 or $3,000. The biggest problem now is losing more than $2,000 or $3,000 while making the same amount of money. And this is where we come with the second one, and this is money management, right? Money management. So money management is always about like, what I really love is to take a 1 minute chart and not just a small green candle, and we adjust $100 there, we get $500 in profit. The thing is, we need always to trade in the right direction, and we have also limited shots a day. So to increase trade quality, time, volume, and price can help us a lot using here the volume profile. So first of all is to understand that the volume profile, very often it is said like you need especially the volume profile. I highly disagree with that, because if you just look at the candles, you can see here that there are a lot of candles. You can see here a lot of candles in this area, and that there are here a lot of candles. And now you see here the average a bit, this green line here, right? You can see how this green line also goes here through what is from the past, because it shows you where the highest volume is. By the way, also these areas where we have a lot of candles, you just see there is a lot of volume. That means the market will make a mountain in this area. And then if you just look at the average between this, and this, it's just somewhere, if I take now violet, it's just like somewhere here in the middle where this green line is. And you can see exactly here is also this average. So usually most people don't need the volume profile too much, but when it comes on a professional base and you want to do this for a living, or especially on a side hustle with, you just want to have an earning from it, I think like it would make a lot of sense to do this, because it's an information that will make your trading really way more better. So when making the chart small like this, you can see now that here's a mountain. That means the market had here a lot of time, because you see here a lot of candles, and the market was having here a lot of volume, because when you have mostly where candles are, like here and there, and the whole big circle here, this is also where volume is. Sometimes the market loves to go at where the market had more time. If you just look at the candles here, you see maybe here at the, yeah, that's actually very nice. At the top here, you see more time, for example, produced here than on the bottom. On the right side now, if you compare, sometimes you find a mountain that is here more stronger than up here, and that means like it had less time down here, but more people were trading down here, it would have more volume. Currently, what we see here and how this tool can help us is that we can see here there was a lot of time at the top and there was a lot of volume at the top. That means people wanted to trade longer in this price area and people wanted to trade more up here than down here. And what the market loves to do very often is it loves just to strike down, it loves to strike up, and then just to show us here on the right side how much volume wants to be traded, and of course how much time in reference was the market at. And it's always a combination. We can never say like time is more important to volume or vice versa, that volume is important more than time. It's always about like seeing where the market likes to go at and understanding that the market wants to go always to bigger structure highs and to bigger structure lows. Very important. This is a 1 hour. This is a 30-minute chart here, by the way. Not a 1 hour chart. This is a 30-minute chart here, by the way. And this volume profile here is on a weekly base that you see here, or monthly base, what is very interesting. The thing is just that you don't need to have the too higher structure like this, because what would happen is when you day trade, you would need to trade for 4 or 8 or 9 hours. But it's nice to show here on a bigger scale, because if you have this profile, and let's assume like you are trading 2 or 3 times a week for 1 hour, you're doing day trading. This is something what is very important to me. Then you can see here, for example, in this session here, the market is more likely to push up. And you can see here these moves here, always 2 candles here are 1 hour, for example, and each of them are like $800 or $2,000 moves with enough leverage, because this is the future market. And then here, for example, also within 2 hours, the market here does really, really nice pushes up here that we can trade. And then here, for example, somewhere in the middle, right? Like here you see how the market is going higher. And here now how you see how the market is wiggling around. And we go now here to the right side and you would trade here. You see also how the market goes up and down with $500, $2,000, $3,000 moves when having here enough leverage inside. What is actually very nice. And when you use this chart here, like a 1 hour chart, you know exactly here's the bigger structure high. Here's the bigger structure low from outside. The market reached this high already, and because it cannot go above, the market wants to go down to the low. Now it cannot go to the low, and what the market does very often, the market likes to go to the high. And when you have now the information that there is more volume traded here, I would right now assume more that it makes more sense that the market goes up than going down, because the market likes to go back and forth between highs and lows. Sometimes, I'll draw you an example here. Sometimes you'll have a high and you have a low here, such as this, and the market cannot go above this high here as you see here. And what it does then, it goes back inside. It showed us already, it needed to press here actually more up. And now it depends if buyers are coming in, if you can see the market is pressing up. But what happens very often is the market will aim either for the bigger structure low or a smaller bigger structure low. And if the market starts here not pushing down enough, then it continues to go up. But what is of course good is if the market pushes through like this, doesn't go down, comes in and now wants to get up. And this is something what we have here, by the way. I hope it's not too complicated. I hope that you can understand this. Is that when you look here at the market with this profile here, look at the outside, the most highest and the most lowest point of this consolidation phase. You can exactly tell the recent time the market was striking this one was here. The recent time the market was striking one was not here, for example. Market couldn't reach that, but the market was able to reach this low here. And because the market did not go below here and prints here a lot of green candles, this pressure, what you see here, there's a very high chance that the market will apply this here for later on once the trading session starts. Hope you could take something out of this video with the volume profile. Leave me a comment below if this helped you out. Wish you all love. Good trades. JT out.